Hi everyone, I would like to just take you through the Excel activities for this week. They are in addition to some other activities to help you practice, that are designed to help you practice the trial balance adjustment that we're looking at in session 3. So just a brief look at the module outline. So the session 3 over here, trial balance and financial statements. We're focusing on assets, identifying assets, liabilities, income, expenses, and equity. We're also focusing on how you look at adjusting a trial balance so that you'll be able to look at those elements, and then explaining the 3 financial statements. But my focus will be on the assignment, assessment 2, where, as you might have noticed, the assessment 2, here we go, open book question and answer, individual. These are simply definitions that you should be able to explain. And then the trial balance adjustment, there's a total of 52 marks for that question. And one of the requirements is that you do this by using Excel sheets and formulas, create formulas for that. So I really just wanted to help you with that. Again, the activities this week will help you also with that. So let me show you the different entries here in the assessment. It's a depreciation, and then there's a bad debt situation, there's emergency repairs, and then invoices that hasn't been captured yet is D, and then E is some transaction that hasn't been captured, and then the F is also a transaction that hasn't been captured. So that's the role of adjusted trial balance, or adjusting the trial balance, is to take care of these issues and then adjust the trial balance to get to and adjust the trial balance, if that makes sense. So in the module outline, or the module page on my SACAP, your screen will look a little bit different to mine because you're looking at a student view. But essentially what I'll have on here, or have on here, are these, 3, 4, 5, 6, 7 items. There will be an 8th item, which will be this video that I'm recording, so that you can have a look at that before you start with these Excel activities. So what there is a voice thread to look at trial balance and financial statements, further content around financial statements, a bit of a deeper understanding. And then I suggest, before you do the Excel exercise, that you work through this PowerPoint trial balance adjustment example. So this is the example. When you download this PowerPoint, there would be instructions there, and the instructions, the adjustments will be very similar to what you would do for the assessment. The numbers are different. So you can try that, and then you can look at the model answers and go back and try it again and look at the model answers to see how that is done, and get used to the calculation using a normal calculator. Because I think that's important for you to understand the assessment, the trial balance adjustment question from this perspective, before you try and program it in Excel spreadsheets. Some of you may be more familiar with Excel, others not. So I'm going from the point of view of those students that perhaps needs a little bit more Excel guidance. So for that question, Excel trial balance activity rather, which is also modeled around the assessment, the numbers are just different. There's the model answer for that, suggesting that you do this activity after you've done all of that and watch this video, which will be inserted here somewhere. Yeah, so the guidance will be in this Word document. You can download that from there. It is just explaining sort of more or less what you need to do, what I'm basically telling you now, the importance of Excel and so on. And then there's some resources here. These hyperlinks will take you to some resources. I think this is a video. I can't remember what this one is, but it might be a video as well. I'm not sure. Well, let's just click on that and see. Open hyperlink. Spreadsheets. Now, this is an article, so it's useful for you to read through that. So go back to the Word document. So that's an article, but these are videos. And then this is a book that SAICAP has on the electronic library, in the electronic library, that speaks to Excel, Excel 2019, but the essence of the formulas explained in there would be the same as what you would use in your version of Excel. Okay, so you can look at that. And then I'm just going to work through this document and show you what the calculations look like, which will hopefully help you. Again, I'm emphasizing, although I'll show you how that looks in a video that I'll post here, do work through the rest of this information, this presentation first, including the first two VoiceThread items, which are videos, and these two, which are activities. This is activity, you can check the answers here. Then watch the video where I'm explaining which you will now be watching, and before you get into the Excel spreadsheet. So if you have started this video, pause and first go and do the rest of that before you go into the Excel activities. So now you will, if you open this Excel trial balance activity, you will click it on your side and you will, I don't know what your interface will look like, but it will be something like that. There's the spreadsheet, you will save it on your computer and then you will open it and work from there. So I've done that already. I've opened the document and this is it. Okay, and let me see if I can make this a bit bigger. Some of you may be on smaller screens than what I am. So this is the trial balance example activity with the heading there, adjust the trial balance of the big idea company, and then the adjusted trial balance format will look like this. Your accounts are listed in the first column there, and the totals of each of those accounts are listed as debits and credits. So share capital is a credit and long-term loan is a credit. Those are liabilities and equity, and assets like land and buildings would be a debit, and the debits and credits down here will get to a balance situation, because as you hopefully know by now, your accounting equation must balance. So the debits equal the credits. Okay, and then what you're going to be doing in this exercise is you're going to determine what these adjustments are to those accounts. Okay, so some of them needs adjustment, not all of them. And then you will post that in here as debits and credits, and or credits, and some will have debits and credits. And then you will create a formula to put it in this column or that column, depending on whether it's an asset, an expense, or liability and income. So the formula used for depreciation, for example, the depreciation exercise is below here. Depreciation on equipment and furniture and equipment. There's a spelling mistake there. I'll have to fix that on the other one as well. Equipment is to be calculated at 20% on a reducing balance method. Don't get thrown by the reducing balance method. All you can know about that is that the balance that is currently in here needs to be reduced by depreciation. So equipment is in at 200,000, and furniture and fittings at 50,000. So I'll just show you how the calculation looks in like if you had to use a normal calculator. So was it equipment? What was the equipment? Is the higher value. Equipment and the opening, the balance at the end of the year before adjustments is that. So the adjustment is 20% on a reducing balance. So you need to reduce that by 20%, and the new asset value will be that value less 20%, and depreciation will be that 20% part that you will take to the income statement as a provision account. So 200,000 to calculate 20%. The basic maths behind that is that 200,000 equals 100%. So 20 over 100 would be 20%. So what you do with the 200,000 is you multiply that by 20, and you divide then by 100. So let's just see what that might look like in an Excel calculation. So follow my calculation as I do it. So I will say, and just for now, I'll say equal, which is the way that you start a formula in Excel. And you will then say 200,000. And then you need to multiply that by 20, and the multiply indicator in Excel is an asterisk, like that. Multiply by 20, and then you need to divide by 100, and the divide indicator is a slash. So slash, so 200,000 times 20 slash 100. That's the formula. Now I must still enter that, so you press enter, and that gives you 40,000. So that's the depreciation, and that's the calculation, one of the type of calculations that you can do. So it's just a quick check, just quick maths. If that is 200,000, 10% is 20,000, therefore 20% will be 40,000. Okay. So the other way that you can do that, that would be also easier, or perhaps more easier if you do a lot of these calculations, is that because that number may change, and then if it changes, you need to change that number in there. But if you do the following, I'm just going to copy that down. Instead of over here, where you have the over here in this box here, left top, there is equal 200,000 times 20 divided by 100. You can replace that 200,000 by what we call a cell reference. So the cell reference is O47. It's O47. It's indicated over here, top left as well. So it is O47 over there. So what you can do is you can say O47 and take the 200,000 out. And if you enter that, that will give you 40,000 again. So let's just say the number changes to 180,000. Then you'll see the number there changes to 36,000. Okay, so these formulas can become quite complex, but your complexity will be more or less around this level. So if you work through this a few times, look at the video. When you re-look at the video and see what I've done there, you might get the hang of it, and just keep on trying. Okay, so that's the indication of the calculation over there. So, and then the other principle behind this, and it's just for practicing, when you do this, is we've now calculated these entries here, and this is what you'll do below here for the others. So we've done the same thing for the furniture and fittings, calculated the depreciation in a similar way. So depreciation for equipment is 40,000, and depreciation for furniture and fittings is 10,000. So depreciation is call it in inverted commas an expense. You're reducing a value by that because you need to write off depreciation. So the depreciation account is debited by 50,000, and equipment will be credited by 40,000, and furniture will be credited by 10,000. So now what you do is just remember that this 50,000 is cell reference D45, D45. Okay, so if you go on top here and you go to the depreciation line item, which is in the trial balance, there is nothing there because you haven't yet provided for depreciation during the year. You're doing an adjustment now. You will see that there's the 50,000, and the formula is what you put in here is equal D45, and it will pull in that number into that spot. Okay, we'll get to this calculation a bit later. So this is how you will work through all of these adjustments. So let's just do the following one. High Flyers Pty Limited, who owes Big Idea Company amount of 42,560, has gone bankrupt, and all efforts to recover the money from them have failed. Okay, the amount now needs to be written off. The original invoice to High Flyers was 37,008 for consulting fees and 552 rand for VAT. So what you now need to do is you need to consider VAT and the original service fee, the consulting fees, which gives you a total of 42,560. So what is in debtors is 42,560. So you now need to credit debtors with VAT to take it out of debtors, and you have to debit certain other accounts. So let's do that. So what we do with a debt that goes bad, you can't recover, is you take that to a bad debts account, and that will be the value of that less VAT. You need to write off 37,008 to bad debts. And then the other account that needs to be debited is your VAT account, and that will be debited by the 552, and then your debtors will be, normally creditors are credit amounts are indented like that. You don't have to do that. I'm just giving you the full explanation. So you can see the total of those two, 42,560. What is it? 42,560, and debtors will be credited by 42,560. So the reason you would do this is that when you made the sale, of VAT inclusive, or when you did the consulting fees, which is the equivalent, roughly speaking, of sales, you bill the customer for 42,560, but the sales amount, what you put in the revenue account, would have been 37,008 credit at the time, because remember, that would have been a debit to debtors. That would have been a credit to the sales account, and that would have been a credit to the VAT control account. It is a credit. It was a credit because at that time you made a sale and you're collecting VAT on behalf of the receiver of revenue, and therefore you needed to, at that point, credit VAT with 552. And sales was credited with 37,008. Now the debt is bad. You debit bad debts. You debit VAT because now the receiver needs to hand that money back to you because you have a bad debt, and you must reduce debtors by 42,560. Okay? So you don't need to do any calculations here, except just to check that that number there, those two numbers, which if you can check at the bottom here is 42,560, and it equals the 42,560, and you can check that with the with this calculation in the yellow call-out box. The same you will do for the others, a similar reasoning. Your adjustment C is extensive emergency repairs had to be done to the plumbing system of the building during the last week of the financial year. You realize that you have not received the invoice from the plumber. So you now need to make a provision for that. Although you haven't received the invoice, you match when you received the service to the accounting period that you're in, although you may pay the invoice only later. So you need to make this adjustment. The quote that you accepted was for 18,750, of which 16,305 was the service fee, the repair fee, and then VAT was 2,445. So what you do here is repairs and maintenance, and I just want to make double sure that we're on the same page. That's an expense. Okay. And an expense, when it increases, gets debited. So the expense portion excludes VAT, because the VAT portion is something that we now put into the VAT account. As per the explanation in the debtors, there's a similar reasoning here. So you repair something, and the value is 16,305. And then your VAT account is debited with 2,445. And then what you would credit here would be creditors or accounts payable, because you owe that money to a creditor, to someone that did a service for you. In other contexts would be someone supply you material, that would be creditors. And I'm just going to do the indent there so it's clear, and the number here would be 18,750. Okay, and then you can do a check with your cursor, highlight those two numbers at the bottom here, 18,750. And then that's 18,750. This also illustrates to you, and I'm emphasizing that again, that the trial balance, the books will always balance. Liabilities and equity will equal assets. So you can see the accounts balancing the expense accounts as well, because it's the same principle. Okay, adjustment D. You only receive invoices for water, electricity, telephone, and municipal rates and other service taxes a month in arrears. You estimate the total amount to be paid relating to these services for February to be 8,522. Rates are VAT exempt. Certain things are VAT exempt. And total VAT included in that 8,000 is therefore not exactly 15%, but it's only 522 Rand. So the net expense is 8,000 Rand, which is broken down like that. So what you need to do here is you need to say the first element there is water, electricity. And that will be an expense, and an expense gets a debit, 1,300. And then the next expense account is rates and utilities, 4,000. Rates and utilities is 4,000. And then the other expenses, telephone of 2,700. And that's telephone. And then the other account that needs to be debited would be for the VAT. And that was, what is it, 522. And then the credit will go to, we still need to pay this, so that would be a creditor. And we can just check the numbers again. Creditor will be, what was it, 8522. And you can do the highlight of those four numbers, and then you can see at the bottom the 8522, so all of this balances, okay? And just a little bit on this VAT. When you sell something and you charge VAT on, you take VAT on that, you collect that on behalf of the receiver of revenue. That is also called an output tax, output VAT. And then when you work in the business, that the business generates the sales for you, when you spend money to work on that entity that can generate sales for you, you can claim back the VAT on the elements on those transactions because you're investing in a business, and that needs to be offset as an input tax, input VAT, against all the output VATs in the VAT account. Adjustment E, you recently sold some old office equipment with a book value of 2,000, and this book value of 2,000 is the value in the books of this adjustment that's been made, okay? So you don't need to do any other type of funny calculations. All you do is you say that you sold some of the office equipment with a book value of 2,000 Rand to a small NGO for 1,500 Rand, and at year end you realize that they have not paid the invoice, neither has the bookkeeping been done to reflect this transaction. Okay, so what you need to do is you need to, the NGO then becomes a debtor to you, and you're ignoring VAT on this transaction. So debtor, which is this NGO, would be 1,500 Rand. And then let me just do the other calculation first, which is 2,000 Rand. Further office equipment, 2,000. So office equipment must be reduced by 2,000. Okay. And I'll indent that to show the credit. So you can see there's now a difference. The books don't balance. Okay. So you sold office equipment at a value to you of 2,000 to an NGO for 1,500. So what you now need to do is you need to account for that 500 Rand difference, and you would account for that to what is called loss on sale of equipment. Okay, and that would be the 500 Rand, and then you can see 1500 plus 500 is 2000, balances with that. The last adjustment is that during the year you discovered, or at the last, in the last week of the year, you discovered that stationery to the value of 10,000 Rand supplied to you the previous week and taken into stationery stock was incorrectly supplied. The supplier agreed to take back the stock and issue a credit note of 11,500, which is the actual stock value of 10,000 and then 15% VAT. So you return the goods but and receive the credit note, but you haven't yet made a book entry for that. So yeah, you can ignore this 30 days after receipt thereof. This is just there to fill in the picture completely, but you can just focus on the numbers as I will show you now. So you discovered that stationery to the book value of 10,000 was supplied to you the previous week and taken, sent back. So the creditor would have been in your books at, 11,500. So you need to reduce the creditors by 11,500, the full value. And then when you received that stock, you would have taken that into stock of stationery, inventory, and the value in the inventory would have been 10,000 Rand. After you excluding the tax from the inventory value. So what you need to do is you need to credit inventory, some call it stock, by 10,000, and then the same thing now as explained earlier. Previously you claimed input tax. Now you need to refund the receiver of revenue the 1,500 Rand. So therefore the receiver becomes a creditor for you. So you again 11,500, 10,000 and 1,500 are the other entries on the credit side. We'll just do the indent there again. So these are all the entries. Now what you need to do is now you need to bring those into this trial balance example. Okay, and we'll do that now. So what we will do now is just systematically work through these entries, these we call them journal entries, and take the values to that trial balance adjustments. If we look at the first one, some of the entries have already been taken to the top as examples to you. So for example, this depreciation, it was taken to there's adjustments as an adjustment debit, and you can see the formula in there refers to where this value is in the journal account. Okay, and in here you will see the formula as actually there's actually a formula doing that for you over here rather than typing in the 50,000 over there. Okay, but now you need to consider, are there more depreciation entries to go in here? And we'll just quickly glance down here. There aren't any, so that formula is correct. That is only the one number that needs to go there. Now we get to equipment. There's a credit of 40,000 here for the depreciation, and as the example, the 40,000 was illustrated as being to be reduced the asset by 40,000. Let's see if there are other elements that affect equipment. So we go down here and we just have a look through the where is this? And then you realize that adjustment E, there's another office equipment credit that needs to be taken to the trial balance. So there is 2,000 Rand there. So that is cell reference E69. Okay, you with me? 69, line 69, and column E. So that is E69. So what we need to do is, with this amount over here, we need to say plus E69, and then it will pull in that number and give you a 42,000 number in here, which is the correct deduction of the 200,000, which is 40,000 for depreciation and 2,000 for a piece of equipment that has gone to the NGO. I'll come to the final column afterwards. So furniture and fittings, book value 50,000, less 10,000 depreciation. There are no other entries for that asset, so we can move on. So then let's see what's the next entry here. So bad debts is 37,008. There are no other bad debt entries. So what we can do is we can say 50 D50 in bad debts. So we go to bad debts and put that in as an expense. Make sure that I've got this correct. Yeah, D50 equal D50. So bad debts entered as 37,008. And what's the other part of the entry?